Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the gold market. So on technical side we do not have any drastic changes. Mostly we're following with the same trading plan that we have announced in the middle of the last week, and it consists of the two parts. So first part of our trading plan is a grabber that we have on the daily chart, and this pattern suggests the taking out of this top. So we have few targets above this area. I will show you it a bit later on the hourly time frames, on the 4 time frame chart and the hourly chart. But general idea that grabber should trigger at least minor spike above this top, so it has to challenge this top, whatever it will be. So it will be either direct breakout and upward continuation, or it will be just spike and stop grabbing, some wash and rinse of this top and drop back down. But this top has to be challenged, so that is based on the grabber. Second pattern that's a bit more extended, and it's still potential, is a double repo sell. Currently, it's very difficult to say what particular reasons, driving factors, could trigger the retracement. But from the technical point of view, we have good background for a possible double repo. So first, we have great thrust up. We have close below the 3x3, first close, and market hasn't reached the fib levels. Even this fib level has not been touched. Now, market is moving higher. We do not have yet the close above the 3x3, but appearing of the grabber here, this is a great handy tool that suggests that second top has to be formed, and correspondingly we have to get close above the 3x3. Then we need to wait for reversal and close below the 3x3 to get the confirmation of this pattern. As a byproduct, also we keep in mind that it might be double repo failure, which is also the directional pattern, but it suggests upward continuation. So that's what we intend to keep an eye on. Since the double repo is still some future standing pattern, because we do not have yet even the half of the pattern in place, we now are actually focusing on the grabber itself and possible upward action. So on the 4-hour time frame chart, currently we do not see any reasons to deny this idea with the free drive. It's just because it totally and perfectly fits the idea of the grabber as well. Performance on Friday, as you could see, was not really very significant. Reaction on the payrolls was moderate. It's not really big performance. And it absolutely doesn't hurt the overall shape of the pattern. So everything stands as it was actually in Friday's morning. So speaking about the targets, as you could see, that actually free drive suggests the target has to be around 2018-2024. So that is where the third drive should be completed. Also take a look here, guys, that we have nice divergence on the 4 time frame chart, right between with the MACD of this tab. This also suggests taking out of this tab. Finally, on the hourly chart, we have another target based on this ABCD pattern, XOP, which is around 2013. So it's slightly below the target of the free drive. And probably we could treat this target as the minimum target of the grabber. So supposedly if grabber will work, at least the 2013 area should be reached. Speaking about the performance with these head and shoulders that we discussed in last week, and we used this pattern as some kind of the indicator to make the conclusion of the bullish performance. Here stands, well, you could see that this pattern more and more is taking not natural shape. So the shoulder is overextended here. As we said, if market move above the 1995 area, that's probably will be the sign of the failure. Here we have the acceleration to the OP, and definitely it stands not in harmony with this one. So it might be the starting process of the failure of this pattern. Currently market stands in the pullback to the confidence 1988, 1990. And potentially that might be interesting area for possible position taken for the upward continuation to the XOP. Acceleration suggests that market should keep going to the XOP. So here is also we do not have any clear bearish context that could put some question on our trading plan and bullish scenario. The one thing that we have to control here is the C lows right there. Until market stands above it and flirting with different levels, it keeps bullish context. If somehow market will break it down and erase the BCD pattern, that will be the warning sign, putting in the question the bullish context. So just use this as a vital area invalidation point for this scenario. So that in 2 words that we have on the gold, and let's see how it will turn on the next week.